Could Bitcoin mark the future of what will become blockchain-based digital equity? So what I am saying is that Bitcoin is actual equity, albeit a very futuristic version of it. You see, because owning a piece of Bitcoin is actually owning a piece of the underlying network. Because the fact is, when you own some Bitcoin, you are actually owning a piece of the underlying Bitcoin protocol. So you are actually having equity. You have digital equity of the underlying Bitcoin blockchain. This is a complete change in paradigm and thinking of traditional companies and the shares they issue as we move towards decentralized autonomous organizations. You see, because Bitcoin as a network is a decentralized entity that issues the Bitcoin cryptocurrency to those helping to secure the Bitcoin blockchain. These coins are accessed by private keys. The coins themselves never actually leave the protocol itself. It's the private keys in essence which are the equity and not the coins, as the latter is useless without the private key to spend them. So again, what Bitcoin represents is a shift towards distributed and decentralized autonomous organizations. These organizations provide the ability for these systems to behave like a meritocracy, making decisions based on merit and ensuring those decisions are transparent and immutable. These systems themselves are sustained by economically incentivized miners and honest nodes in a completely trustless way. In the final part in our 4-part Bitcoin series, I'm going to explain why Bitcoin is equity and why it's incredibly important to understand the fundamentals of why this is important for the future of Bitcoin. So starting off, what exactly is equity? Well, in our context, equity merely means the ownership or your share of the ownership of a certain asset. For example, if you own some shares or stocks, you own equity in that business. Private equity is the same, with the only difference being the stock is not publicly traded yet. Equity in a home means the difference between the debt you own and the home's market value. If you own the house outright, you own 100% equity of that house. So when we look at traditional companies, they are structured in a way where they issue shares to employees, to executives, and the general public. These shares represent equity or ownership in the company, and depending on how much you own, represents your portion of equity in that particular company. In addition, your ownership of these shares also represents a voting right based on important matters in the company's direction and decision making. This vote can be made in company governance decisions such as acquisitions, mergers, or other major decisions that requires consensus or a decision from the shareholders. Majority shareholders in a company can also hold majority voting power. Now, some examples are Elon Musk with SpaceX and with Tesla. Although he's not the majority shareholder in Tesla, he owns the most of the shares that actually count or have the most weight in the vote. Some other examples are the founders of Google, who also hold the majority voting power in important company decisions, and this allows just a couple of people or one person to essentially steer the direction of the company. As the companies grow and expand, stock can be issued or withdrawn. A company may choose to issue more shares as they are in need of capital. This dilutes existing shareholders' investments due to an increase in supply, and it's also a centralized form of essentially changing ownership and value of a company. Blockchain networks are the future of company structures and issuance of equity, because a blockchain is an organization, but it's also not. The actual definition of an organization is an organized group of people with a particular purpose, such as a business or government department. Bitcoin's blockchain is not a group of people, it is a protocol. It has stakeholders that interact with the protocol but do not govern it. Its rules are defined in the source code, allowing any miner, node, or user to voluntarily connect to the protocol. It is in essence a meritocracy that rewards only for effort and is impartial to any individual factors that may influence it. Now, a protocol-based meritocracy allows for something that we discussed earlier called a decentralized autonomous organization, or a DAO. These organizations assume the protocol to be the entity itself. There are no people behind it, no CEO, no executives. The protocol is the entity itself, and it's self-governing, it's decentralized, and it's autonomous. So by owning Bitcoin, you own a piece of the underlying network protocol. Private keys give you access to a portion of Bitcoin on the underlying chain. Thus, your private key and the amount of Bitcoin you own is equity from the Bitcoin blockchain. As abstract as it may sound, recall that Bitcoin coins and the Bitcoin network are separate. The Bitcoin network is a decentralized ledger of transactions that is supported by miners and nodes. The Bitcoin coin is the economic incentive Satoshi Nakamoto designed into the system to reward miners for their efforts. This was done to compensate miners for computational resources and electricity, which in turn was done to ensure proof of work was maintained on the longest chain. And then we have honest nodes, which are there to validate authentic proofs of work. Now we know that Bitcoin's network is actually expanding its use case beyond just issuing a coin. As we discussed in our previous video, developments such as Liquid and Elements are creating additional use cases for the Bitcoin blockchain, such as the ability for developers to issue their own assets and tokens. So when we look at this from an investor's perspective, buying some Bitcoin means you're speculating on future price appreciation. Analogous to stocks, the bet is being placed on the company or entity to perform better over time, thus increasing the valuation of the issued equity. Now, for a traditional company, this means things like product sales, partnerships, expansions, acquisitions. These are things that are going to increase profits or cash flow and encourage growth, and ultimately contribute to an increase in the stock price. And remembering that intrinsic value and market value should be analyzed separately. Conversely, with Bitcoin, investors are speculating on the entity to perform better. However, the context is very different. Performance can be measured with things like network transaction volume, merchant adoption, wallet creation, hash power, financialization, developments, and so on. You can start to see just how analogous traditional equity is when compared with protocol equity. When interchanging a few keywords and concepts, it all starts to make sense. Bitcoin is limited in supply to just 21 million coins that will ever exist ever. So we know that Bitcoin's supply of equity is limited and enforced by code. We know that the block reward given to miners for their efforts halves every 4 years, and again, that's also enforced by code. Bitcoin's operation is not dictated by any one person, any one organization, entity, or government. It is completely decentralized and open source, so anyone can work on it. Major development firms continue to contribute to the development of Bitcoin, but it is still open source, and we all, as users or stakeholders that interact with the network, are the ones that benefit from it. Now, it's a very interesting subject as blockchain protocols and digital equity start to become more and more of a mainstream concept. And credit for this video goes to Trace Mayer, who once again brought me to a subject matter of Bitcoin and the new blockchain economy that I hadn't once thought about before. I highly recommend you guys to listen to the Bitcoin Knowledge podcast by Trace Mayer, as it really is just filled with so much incredible learnings and so much innovative concepts that really aren't discussed much in the mainstream blockchain industry. So this concludes the final part in the 4-part series we completed on Bitcoin, and I'm just so happy with how things have gone and how well this content has been received. I'm just so appreciative that you guys spend the time to actually leave a comment and tell me that you enjoyed it. I read all of them. My wife and I read them together, and when you put in a lot of work into something, nothing is more satisfying than knowing that you brought people value. So I just am so happy with how things have gone as we wrap up this last episode and start to focus on what we're going to do next. Reflecting on this series and the change the channel has taken just makes me so happy that we've gone down this path, as we obviously don't produce content anywhere near as often, but I feel the content we're creating we are so proud of because of the value we are trying to bring to people and the value it looks like people are getting from it. You know, it's that less is more mentality, and that's something that we kind of get to work on and create and shape and refine these products, this content that's so well received, and we couldn't be more happy about that. And that's the direction that we're going to keep going in the future. So on that, this will probably be the last video for a few weeks as we draw close to Christmas, start to regroup and continue to produce content on our other platforms. I myself am writing a lot on our website, I'm writing a lot of blogs, and I have a lot of writing that I want to do. So I'm going to use that opportunity to take a small break from YouTube and keep writing and creating content on our website and start to plan for what we want to do on the next series. Thinking maybe a series of tutorials. I think the last set of tutorials we did a while ago need an update, need a refresh moving into 2019, or we might even do a series similar to what we did on Bitcoin, but for a protocol like Ethereum. I'm not sure yet. We just need to have a think about what we want to do and how we want to go about it as we move forward into the new year. But if you're not already following us, make sure you follow us on Twitter, because that's the best place to kind of keep on top of where Cryptocurrency Australia is at. On Instagram, we're creating new graphical content, educational content every single day. Our Facebook is slowly starting to get some traction as we learn about that audience, as we learn about the right kind of content. And of course, our website, where we are writing blogs that don't make it to YouTube, that contain a bunch of really good content on different industry topics. So guys, that's it from me. Thank you so much for watching the content. Can't stress my appreciation enough that you guys continue to watch us and support us and comment and like our videos, even in a bear market. You guys are absolutely amazing. I'm the luckiest YouTuber in the entire space to have such an incredible audience as you guys. You guys mean the world to me. Have an amazing few days, have an amazing week. Can't wait to see you in the next video, and I'll catch you in the next one. Peace.